surprisingly dovish, at least in some people's expectations. We had been pricing in almost at 100%, a 25 basis point cut. And now the door looks to be open to 50. What are your thoughts there? Is that an appropriate amount? Should we be cutting rates by that much? I feel like the economy is pretty strong, no?
Yeah, the economy is strong, but the second derivative of a lot of indicators is starting to turn.
Okay.
I'm looking at things like ISM manufacturing, which has become weaker. There is a lack of wage growth. And of course, Chairman Powell did point to the global malaise that is pretty much everywhere. Europe is in very rough shape. This is a theme that we've been looking at for many, many months, really starting since the third quarter of last year. You could see that data starting to roll over. So I think a rate cut is appropriate. I think the door is open to 50, but I think that's a very unlikely scenario, given that the U.S. data actually has held up quite well. I think the bigger worry, quite frankly, is that the benefits from tax cuts are wearing off. And the trade war is likely to be somewhat prolonged because those issues are so complex. So I think 25 basis points is appropriate. But if I may, just on markets for a moment.
Please.
We were oversold in December. And so we've been sort of standing by this tale of two halves narrative, which was that markets were oversold in December. We felt that they would rally through the first half of this year, perhaps not quite this much. At a 2,800, I became a little bit more cautious. We're obviously north of there now, making new highs. But I think we've gone too far the other way. The situation this late cycle is a bit precarious. And when the Fed is forced to cut after hiking 9 times, it typically, in the context of history, means that a recession is not far behind.
And when you look at the context of history and you look at the recessions, it's been a very long time since we've had a recession. But that doesn't mean it has to be coming, because things have changed. We went through quantitative easing. I mean, that sort of changed the game on monetary policy. And you think maybe quantitative easing is not something that's out of the realm of possibility to happen again?
Well, I actually am of the mind that, number one, the business cycle can't be defeated. Right now, we have this classic push and pull between the cost of capital and growth. And right now, the perception that the cost of capital is going to be much lower, that is through lower interest rates, people aren't assessing, in my view, the downturn in growth that will likely come really being born overseas. And that is typical. If the Fed can't kill the business cycle, which, by the way, and this is my opinion, of course, it shouldn't try to, because that's a natural part of capital markets and free markets, then we should expect a slowdown to come. And this idea that the Fed's job is to sustain a recovery forever doesn't seem to square with history or really what the Fed's mandate is longer term. Business cycles, in my view, are necessary and shouldn't be feared. They should be embraced as a part of what makes markets work well.